Well, hello everyone. K Kim here from Traders Club, and well, today I thought I'll do a quick video update, a special weekend update, because I haven't done one on the weekends. But I've been trying to put up a video on on Wednesday nights. We've been doing every other week. We've been doing live midweek update. It's a webinar platform we've been doing. So feel free to sign up for that. Link is right there on my website there. And also I'll try to put up a video on a weekly basis, on a static video on Wednesdays as well. I know, since I'm running few businesses here, it's just sometimes I don't get a chance to just really update you guys as much as I can. But it seems that I'm gonna be a little bit more free. I'm gonna have more time, rest of the summer. So what I'm gonna do is I'm gonna try to put out a video more often for you guys, just kind of let you guys know what my thoughts are, and regarding the market and things like that. So today, what we're gonna do, I promise you, I'm not gonna go too long, because sometimes I can really go off and I can go for like an hour or so, or maybe even 2 hours. But today, what we're going to do is we're going to look at some of these indices here, and then we are going to still look at the market warning signal that we've been looking at. Is still there, and it's starting to get more ugly, and that warning signal is starting to really deepen. And so we're going to talk about that, how we can handle that, how we can maneuver that. There's a warning signal there, and then we got the price action. So how do we differentiate, and how do we protect ourselves and things like that? And then I thought, we'll talk about Apple, Tesla, Google, and First Solar today, and then we'll end the video in that. And first of all, looking at the spider here, first of all, what we have to look out for is that the primary trend is up, and obviously, what we can find out looking at these moving averages, this blue moving average that you can see right here, that's 100 SMA, and then right beneath that, this is a 200 SMA there. And obviously we haven't touched 200 SMA in a while, but that doesn't mean that it has to come down. First of all, what I put most weight on is I like to identify these lows and highs, right? These waves of lows and highs, because that's how you can see where the trend is moving. And obviously, trend can break, but we need evidences of trend breaking, which means at least we will need to see a lower high in a primary trend. What I mean by lower high is, here, watch this. We have these higher lows here, right? So we continue to develop and cultivate higher lows and then higher highs, right? So when we go back and if we study a little bit here, just really quick, back in 2008 when we had this market crash here, that's what we saw, was they continued to cultivate higher lows and higher highs. Again, in a primary term, I'm not talking about a minor term, I'm not talking about intermediate term, I'm talking about the big trend where the 100 SMA, 200 SMA is moving along with, right? So we continue to do that. What happened was we started to, before the market crash, what happened was we started to form lower highs and we put in equal lows, right? Once we see this pattern right here, that's a huge warning signal. You guys remember in a couple of months ago, maybe a few months ago, I was bearish on the market because this fact on the Nasdaq and Russell. We saw that on the Nasdaq and Russell. Well, that has been nullified though, just as of recently, or last, the bulls brought it back up and completely nullified that. And the spider really never had this thing for this formation. So now that we're back, the price action moved back up here. Basically we don't see any of that kind of evidence of lower high at this point, which means benefit of doubt still continues to go to the buyers looking at the primary term, right? So we haven't even seen an equal lows. What I mean by equal lows, this would at least come down here and then make the equal low with this price action, with this low, and then it will bounce, and then it will come down, and then it will make a lower high. Unless we see that's right there, that could be the recipe for before a huge market or market correctional move. We don't even have that. We don't have that on the Dow Jones. We don't have that on Spider. We don't have that on the Nasdaq. We don't have that at Russell. So because of this price action, we continue to give benefit of doubt to the buyers. What I mean by that is we'll get its pullbacks. It's not going to just go straight up. It's not going to come straight down. That's one thing we know, is that, you know, this market isn't going to go and all of a sudden just crashing down. It's going to have its up and down. So it's going to go up, come down, up, come down, up, come down, right? So what we can forecast, what we can give, you know, what we can forecast here as far as a probability is concerned, I would have to say that the you know, if we can able to reclaim that 50 MA on S&P 500, right? On S&P 500, I have to say that the bullish action could continue. 50 MA, once we reclaim that, you can see that last time, this dotted pink line right here, that's the 50 MA on a daily chart on the spider here. When we reclaim that above that 50 MA, what we saw was we had a pretty good bullish run here. How long? That last about a half month, about 2 weeks or so, and then we bounced off that 50 MA with about a 1 week of bullish run, and then we tanked, got back up, reclaimed that 50 MA again, and then we checked that 50 MA several times, and then we had about how long has that been? Almost 2 months of a bullish run here. So because of 50 MA has been acting as strong support in the past, that could also be, you know, all support, new resistance. That's the reason why, though we did see some good move on Friday, right on that 100 SMA, right at this level, which we've been looking at the Fibonacci level. That was a Fibonacci retracement zone. If you've been following me on my blog, I posted it where I talked about how I am looking for bounce here. So you can see how we, bounce right at this level, about 50% level here in retracement zone. Also that level coinciding with that 50 MA. And so this is what I call FRZ, Fibonacci retracement zone. And it gets helpful because as long as we're in that box, as long as if we bounce out of that level or any of these levels, the trend is perceived to continue. So that's why it's important to understand where and when to use what kind of Fibonacci. And so that retracement, that 50%, where it seems to for now that we're bouncing at that level there. However, again, that 50 MA is very, very important. That we wanna see this thing closing above that and reclaiming that. Otherwise, that could act as resistance, right? Because it has been acting as support in the past, and a lot of times that could be another leg lower. We see, like good example might be that we trying to bounce, and that you can see that near that 50 MA that act as resistance. It came down. We went back up though, but if you want to see more of a, there you go. This is a better example here. Went up, it came down, went back up, hit that 50 MA, which has been acting as support in the past, now acting as resistance, and then it brought it down for about a week or so, maybe a week and a half. You can see that another leg lower on S&P 500. So what I'm saying is that can still happen. Though we did see some good move on Friday, I would have to say that the bulls are not completely out of the woods yet. Looking at minor intermediate term, that until we get back above 50 MA. So once we reclaim that and close well above that 50 MA, I would have to say it then we're probably gonna get above this level and continue higher. And once we reclaim 50 MA, I'll write a blog post or maybe I'll do a video and let you guys know some of the target levels that I'm looking at, on next another move before another fallback, or maybe the target until end of the year. So we'll look at that quickly. Since we spent some time here in Spider, let's quickly look at Dow Jones as well and just kind of look at a key level here. Dow Jones, key level to watch. Look at we've been watching here is a 200 SMA. I want you to follow this pink, thick line there, and obviously you can see how that line has been acting as support here and here and here and obviously we're at that level as well. See, the thing about these moving averages, they're not going to always perfectly respect it. This day, yes, it's perfectly respected. Some days we're going to get a little bit below that, so we can't be too focused on like, just one day below it or one day above it or one day of bouncing off of it. We want to see just the direction generally, in that vicinity, right? In that vicinity, what it does within that area. So also, one thing that we looked at was the Fibonacci level here. If we look at just right here, you can do it right here as well. Let's just put up 2 lines here. So looking at more of a shorter term, you can see that, just measuring this move, and then this is what I call FRZ, Fibonacci retracement zone. Yes, we did get barely below it, but you can see how we're bouncing back. This is the thing about technical analysis, that people are so obsessive with this precise level. Just because we precisely broken below, support or resistance, doesn't mean that it's just going to continue lower, continue higher. Just because we got just below this Fibonacci retracement does not mean that it's going to continue lower, because we're right underneath that we had that 200 SMA. So those are the things to watch out when you're using technical tools to forecast certain areas. And so obviously, yes, we gotten below this Fibonacci retracement zone. However, it was just very brief, and so we're trying to gap back up here. Dow Jones had a pretty good day on Friday. Again, what I like to see is obviously we got some of these bigger moving average, 50 MA is up here, and 100 SMA is up here, and then the 10 EMA, we're still above these moving averages. So again, we had a good day on Friday, but we still want this price action to get above, at least reclaim 50 EMA for first initial confirmation to find some momentum to the upside. And ultimately, you want to see 50 MA getting reclaimed. So once we gap back above this Fibonacci retracement zone and then reclaim that 50 MA, then I would have to say that it's going to continue. So we got some little bit more work to do on the Dow Jones here, but since that we are finding some support at 200 SMA, because we did find some strong support on that 200 SMA. So let's watch that this week, see if we can able to get some follow through. Nasdaq is that we are finding support at 50 MA here, and you can see that we are not even near 100 SMA or 200 SMA there. So Nasdaq is a very, very bullish looking stock here. This uptrend support still seems to hold here. What I like to see as far as intermediate price term is to level to watch is that, if we can able to gap back about 96 or so, then I believe that it's going to continue higher, because we do have potential. Again, potential doesn't mean it's going to play out. Possible level head and shoulder. Again, I wouldn't worry too much about this little tiny head and shoulders, because even if that tiny head and shoulder play out, we might get a little bit of decline, but that ain't gonna set up for a huge market correction move. Because look at this, we had this huge cultivation from the bears. I mean, this was in cultivation for what, 6 months or so. I mean, that was some big head and shoulders. Potentially, this kind of a head and shoulder, this big size, can actually crash the market or even have a steep decline. And what happened was bulls completely stole that from the bears. Bears worked so hard to cultivate that, and then bulls stole that from them, and that has completely nullified. So right now, this little tiny thing, I wouldn't worry too much about that. So if we can get back about, maybe reclaim the 10 EMA and get back about a 96-ish and start to fill this gap right about here, I believe that Nasdaq would also continue higher. Quickly here, Russell. Here's the thing about Russell is that, we got back up here. The thing about that is we did put in equal lows, but it failed to put in lower high. That was a very crucial action that bears miss. Bears must make sure the bulls wasn't going to put in equal highs, and it did. So now it pretty much nullified a lot of its bearish pressure. So now what we're seeing is more of a, in my opinion, this is more of a channeling action rather than double top. And obviously though, it could still be a double top where once it break below that, but to me it looks more like, as far as the price action is concerned, seems to me more like a channeling, kind of a long-term consolidation pattern. We've seen something like that happen in Dow Jones in the past right here. You can see that, this right here. You see this, because what happened was it failed to make lower highs. So what we did is we started making like equal lows, equal highs here, equal lows there, and then that became kind of a channeling action, right? And then it continued higher. So when we're looking at Russell, that's, to me, that's what it seems like. What it you know what I mean? That's as far as the price action is concerned. That is what is more, to me. That's what it looks like to me. Is that it's forming some kind of channeling action here, rather than massive double top. Though it could happen, but we wouldn't know until we close this well below it and start getting some follow through and possible retest and then roll over, right? So just because we get just slightly below that doesn't mean it's gonna roll over. It could come down a little bit and it goes right back up. But for now, you see that how we bears were not even able to bring it all the way down to this resistance level or the support level, though it is much bearish looking index out of all the other index. I mean, Nasdaq looking the strongest, and then Spider, and then Dow Jones, and then Russell looking the weakest link out of all other indexes. But you see, it's just that we pretty much nullify a lot of a potential warning signal that we possibly had. If we have a lower high here instead of that equal lows, and you could ask me, okay, that's just only a little bit of just only like 5 points difference. Yes, that 5 points can make huge difference. I'll tell you what, that 5 points, that was going to either become massive warning signal of a market correction, or it was going to become a channeling action, right? I'll show you right here. You can see the difference was here in 2012, small correction, but that was a correction. It was a lower high. Same thing about here. You see this was a lower high. This was not an equal high. If it was an equal high, it would have been some kind of a channeling action, which favors the buyers. But then once we start making lower highs, after playing in equal lows, that was a huge warning signal, and you could say that, hey, that's just only a few points away. Yes, that few points made a huge difference. And back here, you see the difference is we got back to where the highs were made of equal highs, and then so because of this, we have we have cultivated, or bulls are trying to form some kind of a consolidation, the massive consolidation formation. But I mean, nonetheless, as far as the price action is concerned, if we start breaking below that, that's a huge concern. But we got back about, we started to reclaim 50 MA. You can see the last time we reclaimed 50 MA right about here, we continue higher. Once we start reclaiming 50 MA, I perceive that this thing is going to continue higher. Let's look at financial real quick. Financial, we are finding support in this support level right about here, and I would have to say this is a level to watch. And once we get back about and reclaim 50 MA, really, you can see that all resistance, that 50 active support, all support, and then if we reclaim that 50 MA, I perceive that it's going to continue higher. So that 50 MA being right about here, if we can able to reclaim that, I perceive we're going to make new highs. Because why? Higher lows, higher highs. Once it pulls back to create a higher low, when it goes up from that level, it breaks recent high and make new highs. So we pull back from that high to create a higher low. If it reclaims that 50 MA and continue higher, I perceive that it will make new highs as well. So looking at the price action, the pure price action of the market, we looked at financial, we looked at the Nasdaq, Russell, Dow Jones, and S&P 500. I would have to say that bulls got some more work to do this week, but looking at the primary term, benefit of doubt still goes to buyer. There are certain levels we're going to look at is 50 MA this week, maybe next few weeks. If we can able to reclaim 50 MA this week on a daily chart, I do believe that the market will continue higher and make new high. So with that said, let's look at this warning signal that I've been conveying last several months here, and they're continue to build up here, and they're actually starting to get worsened. And the thing about this is that these warning signals needs to be backed up by the price action. Without the price action, we really can't put too much weight on it, right? And several months ago, we did have Nasdaq and Russell with a lot of decline, a lot of weakness on the price action. So I did put much more weight on this. But now that we're seeing strength on the price in the last few months or so that I can't put too much weight on it. But this is something you want to keep an eye on. Just back of your head, you know that there is a warning signal. So this is a S&P 500 versus Treasury yield 10 years. Overlaying or the comparison chart here, and you can see what had happened in the past, and that's what we're seeing here. What we don't know is that currently we're kind of hanging around in this kind of a support level right about here. What we don't know is if this thing's gonna find a bounce and continue higher, or if it's gonna start to roll over. If this thing starts to roll over, well, last few times what happened was that was a level market crashed, right here and right here. So we're just right at that level. So if I zoom in here real quick on TNX, the bad news about that is we're continuing to establish and cultivate lower lows and lower highs, and that's that we're still in a bearish downtrend, right? I mean, we even gotten below this major support level here, and then you can see where we made these new lows. So that's definitely a warning signal. But again, until we get some price action to confirm and condone this move, we can't put too much weight on this, and we can't start just shorting the market heavily. But once we start to see some lower highs, what I explained just earlier in this video on these indices, then we're gonna put much more weight on this. So I'll keep you guys updated in this and see what what's happening and what's developing. But once I see the price action confirming, condoning this Treasury yield move, then there's a huge warning signal, possibly market crash warning, signal, and at least steep correction move. So I'll get you guys updated on it more here. So quickly, let's go through Apple here. One thing that I worry about Apple is actually what we have on a MACD here. What we got going on here. Let me just remove some of these other ones and then just look at the MACD here real quick. Is this what we call bearish divergence? And that is, and I talked about this on my latest post on Apple. And I think that was like early June or so here. What we have got going on is that we have lower highs on MACD, and we did put in lower low, while this price action put in higher highs and then still putting in higher lows there. So that's a bit of a warning signal there. Also, you can see this resistance level that's still in play with a little bit of a false breakout there, but and we got back in, so that's definitely a warning signal there. And I don't think Apple is not going to crash here at this point unless the whole market does get a steep correction. If the whole market, especially Nasdaq, gets deep correctional move, I perceive that the Apple can come back down here. But as long as if this market is in a bullish tone and continue to illuminate and create bullish environment for the whole stock market, that I perceive that we can be stubborn, and Apple can be stubborn and continue grind higher. And so though we have bearish divergence on Apple, I would have to say that again, benefit Dow continues to go to buyers, because why? We put most weight on the price action itself. So you can see higher highs and higher lows with a warning signal on MACD that we do have a bearish divergence. I would have to say that as long as we're above some of these levels right here and above 50 MA, benefit Dow continues goes buyer. If we do lose 50 MA though, things can get hectic for the buyers. It might come back down, it might go back up, and if we start creating that lower high and breaking below this level, then there's something to watch out for. So currently looking at a shorter term, minor term price action here, the 10 EMA has been acting as resistance here. For this to continue higher and possibly make new high, you want to see this in reclaiming 10 EMA to the upside. Once we see that, then possibly we can get to about 102 or 150-ish before meeting with that resistance again. So let's see if we can do that. Let's see if that, we got a little bit of hammer here, but again, the candlesticks, when you do candlestick analysis, what you have to understand is that candlesticks, they cannot stand alone, which means they need friends to come and help them. What I mean by that is if we get a hammer candle here, if we need friends its friends to come and start having some follow through. If we start seeing this, then that's a legitimate hammer and continue higher. However, if their friends don't show up and then this thing starts seeing this, then that hammer is completely nullified, right? Same thing with this little guy. There's a little hammer there, and next day friends showed up, and then a little bit more, and then that was that was completed, and then that that became that that reversal candlestick pattern. But if without that, same thing, this guy right here, this guy was doji, and then friends showed up, and then continued higher. So this guy, let's see if this guy can do something, see if he can call his friends to come over and then help him out and then bring the price back up. If not, there's, so again, I would have to watch for follow through and see if that 10 EMA can be reclaimed. If we can do that, then possibly we can continue higher there. Tesla. And I guess I can finish this video on under 30 minutes here. That's not too bad considering we just looked at a lot of stocks here. Tesla here, the level to watch this week is right about here. If we go to line chart, sometimes it's a bit easier to look at some of these pivot levels, and you can see that level about 240-ish. Okay, so there's a good chance that we come down to 240. And then retest it and maybe meet with 10 EMA here, and then before bouncing higher. And at that point, if we can get rid of or clear 260-ish level, I believe that we can get to 280. And my target, ultimate target, still being about 330-ish, possibly by November or so, but maybe even earlier, depending on how fast. Because when Tesla move, they can move very, very fast, but sometimes it can grind for a while before it's moving higher. So, this uptrend still holding here, all these moving. So trend is up. This is the reason why you want to stick with the primary trend, not the intermediate or the minor term, because because again, these stocks are not going to go straight up. It's going to go up. It's going to come down. It's going to go up. It's going to come down. It's going to go up. It's going to come down. That's what we call trend, right? We always say trend is a friend, right? But then not everybody honors that. Not everyone knows how to use that for our advantage, because most people are very, very short term. And you know what? I'm not saying that if you're a short term trader, if you're a day trader, that's perfectly fine. My analysis and the way I trade, I love to trade for longer term. I mean, I've been long on Tesla since what, June 17th or so. So I've been holding this for about 2 months here, and I'm willing to hold next 2-3 months to get to where I want it to go. I'm guessing at least 300 or 280-ish before I start closing some of my position. But so time frame is important. But for me, looking at a primary term is important, and also, if you want to be able to catch some big moves, you really have to look at a big, the long-term price action, the long-term trends to able to identify or gauge and to forecast and to identify the probabilities of, in any pullbacks. When it see if it has a good chance of making it back up to the upside. The thing about what we don't know about trend is that when we pulls back, there something that I always say here in Traders Club is that we embrace pullback. We don't freak out on pullbacks, right? Because after pullback, there's a much bigger move that likely to come, right? It goes up, we pulls back, and then there's a much bigger move that is going to come after that. And obviously, you know what? There's times where it's going to have a steep decline, and obviously we got to forecast it. We got to have to make sure we don't get caught in that. But you know what? This was no surprise for me, because after this kind of move, that's a parabolic move. We haven't even cultivated any kind of support level. Oh, obviously, once the support level broke, I mean, it came down. Here, we have much more solid bullish move. What I mean by that is we've had these higher lows and higher. That's why, to be honest with you guys, I actually don't like moves that go straight up like this, because a lot of times a straight up move can be defied by the straight down move. But if we start to cultivate higher lows and higher highs, that move can able to prolong, and that trend can able to be sustained and be strengthened. You know what I mean? So Tesla looks to be much stronger trend, in my opinion, versus this move right about here. And in that case, we can able to prolong this uptrend and maybe continue to ride that. So I have a plan to continue to hold this and continue to ride it to the upside until we get to a certain level there. Again, my ultimate target is still 340. Let's see if we can get there. Google, we're still on this, and we've been long on this since late June here, and some of the levels are still holding. The thing about that is that's what it does, is it's not going to go straight up. We got up, we came down, we got back up, we came down again. But the important part is we continue to cultivate and establish higher lows, and we don't know if this is going to be high or low here until it bounces back up. We are currently holding this pivot level here, old resistance, new support, and possible support level right about here. We do have 100 and 200 SMA coming right here, so we'll see if that level gets hold. But you can see 10 EMA, we need to kind of reclaim that we gotta. Again, follow through is very, very important. Looking at these candlesticks there, this candlestick, this is what we call bullish bell hold, right? This bullish bell hold is same guy as this guy right here. Again, they can't stand alone, right? They can't stand alone. They need friends to come show up and help them. And there's a friend came up right here. So if you can have another guy to come this week and then possibly get above 583-ish and close as well above that, if we can see something like that, I do believe this trend will continue. Though, filling this gap will be important gap. There's a little bit of downside gap right here. Fill this gap, and once we break above that, will be a full confirmation for this market to continue higher. For first stage of confirmation, we get above this level. There's a good chance that it's going to continue higher as well. The last one, First Solar. This one, 200 SMA was definitely the level that we've been watching, because that level has been strong. And we'll end this video with this one. This will be my last analysis today. Definitely a strong level of support. You can see how 200 SMA coming here, right? You can see from here point on. This is why it's very, very important to look at the price action in the past, not just minor term, intermittent, but looking at a primary term is very, very important, because you want to see these levels. If it has been respected in the past, it's gonna respect today. So coming down here, 200 smacked a strong resistance level, and then it started back up, and then now it changes team and then became support. So it's now all resistance becoming new support. You can see that here, right on that 200 SMA, right? And then once it changes team back to a bullish, supporting the bullish, now it continued to support the bulls right here. Here. Again, it wasn't right on that, right on that level, but it was in that vicinity, right? What was important was that, trend was, the wind was blowing to the upside. That's how it's very important that you look at moving averages in that sense, in that perspective. And then again, here we got slightly below 200 SMA, but that was not what was important. What was important was, we are still in that vicinity area, and that will is continue to act as support here. And also, you could have probably drawn this uptrend support right there. You can see that it held here, and here. And then so we act as support at 200 SMA. Same thing happened right about here, 200 SMA, and then found support there. It's interesting, again, we found support at 200 SMA. Isn't that interesting how these things continue to happen, right? Once it became a support, it continues to happen. This is a reason why we stick with the trend. A lot of people say that, a lot of people talk about that, but it seems still not a lot of people know exactly how to apply that in our trading, right? So major level that I was watching when I was blogging about it in my journal post is at this level, because this level has been that pivotal level, because you can see that it has acting as old resistance in the past, and we break right through it. There's a reason this still could come back down here, retest this level before continuing higher. There's another level of resistance you want to watch out for, is this level right here in about 70-ish. We need to get back above that, so we could have continued higher, maybe pull back, and then break higher. But this is a level we need to break for this to really break free. Once we break out of this level, I do believe that we'll get to 80 or even 82. But this is still a hectic level for the buyers. Once this level gets rejected, there could be a chance this might get a rollover. So it's very important that we watch this level and see what's the price action is going to be like, and to deal with this if you are in this position there. I mean, I've been in this position for a while now, since middle of June here. We held through this whole pullback. The reason being is that because we were looking at primary term. right? And so that's really important. Again, you know, look, everybody has a different time frame, the way they like to trade things. But again, I like to do things in a much longer term. And my target is not just few points here. My target actually is here. Let me give you my target on this. About 84. Though, you know, there's a chance that we could break above and continue even higher. But you know, this level has been resistance level right here. So I'll some of 84, 80ish level at best. Some of these levels are my targets, and so you know, because of this, I have much bigger target. I give much more bigger room for it to move, right? So that I don't, you know, so that I don't emotionally get swept away at certain abrupt sell-off or abrupt pullbacks. And in those first solo, if you're trading first solo, that's what it does. I mean, it's a bit emotional stock. It's not going to be smooth in its bullish or bearish move. So you kind of have to understand each individual and his personality. So, well, there you have it. If you have any questions, feel free to leave a comment there on my blog on the comment section. Again, not this Wednesday, but next Wednesday, August 20th, I'm going to be doing live midweek update webinar, and I do that every 2 weeks. So sign up for that on my website. There is free. You can interact with me live. I do that on every other Wednesdays right after market close. And then I'll try to I try to do it on a weekly basis and put these updates for you guys on a video format, so that you guys are fully aware of what I think what's happening and things like this. So, well, I hope you guys enjoy your Sunday, rest of the Sunday, and we'll talk soon.